Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over a stock that I am constantly conflicted with. It's about 3% of my portfolio, and I'm constantly going back and forth whether or not I should increase it in my portfolio or decrease it. And the stock that we're talking about makes up 3%. We're talking about Altria. It's by far and away the highest yielding stock in my portfolio. I'm currently up about 15% on it on a money weighted return, and I own about 6.5 shares of it. And as of today, it is over a 8% dividend yielding stock. And I'm going to go over everything in this video as to why I own it, what it pays me on an annual basis, what my cost basis is, what it's looking like in the future for Altria, just some of the basics about the business and moving forward. And I'm going to go over a lot of different pieces of information here in this video with Altria. So if you're new to the channel, I'd invite you to subscribe. This is going to be a fun one if you're interested in this company. But overall, guys, if you want to subscribe to the channel, I track my annual and monthly dividend income through these charts every single month right here, as well as my portfolio value and my monthly YouTube income. I disclose it all, and these are the 24 companies that I currently own, including Altria on this little section right here. But if you want to get signed up with M1 Finance, this is the brokerage that I'm currently using. This is what I purchased these shares with for Altria and all my other stocks as well. And we have 70 people signed up using this referral link. So if you want to go ahead and get that number to 71 to 72 and beyond, go ahead and use this link down below in the description. It's this link right here. And right now they're having a promotion with M1 Finance where if you get signed up and deposit $100 to the platform, you no longer get $10 for signing up. You now get $30 for getting signed up. So if you go ahead and check that out, I'd really appreciate it and you'd help support the channel. And there's lots of other things in that description as well, including auto savings accounts, mentoring calls, and lots of other things as well, including my investing pie. But thank you guys so much for tuning in. And let's go ahead and take a look at Altria. So Altria, I'm up 15.22% on it, or $18.51 worth of profit. I have 6.5 shares of the company, and I have a cost basis of just under $40 a share, and it's currently trading at a little over $41 a share. Now, this company pays out massive amounts of dividends. It has incredible cash flows. While its companies had some issues with recent years and with its core business models and some of its ventures that it's had, it is getting to a point now where it's so cheap to buy it, which by the way, I don't know why that says 105 PE ratio, that's not correct, but it's so cheap to buy this company that it's hard for me to not to invest in a company that has an 8+% dividend yield and a growing dividend payment every single year, including a dividend raise here in 2020. But if we go ahead and look into the future, let's go ahead and look at the fiscal year 2020 EPS outlook. Altria did just raise their earnings per share outlook a little bit compared to what the consensus was. And if you look at these numbers here, Altria projects an earnings per share of $4.30 to $4.38. And considering right now that they're only paying out 86 cents a quarter, that works out to be a little bit under $4 a year. And if you look at the earnings per share, that is well over $4 projected. So they're still definitely covering that dividend and still having some cash on top to pay back debt or reinvest back into their business. So that is good news there. And they did have some up in share price when that was announced. But I want to go ahead and show some bullet points here for Altria. This is their investor relations page, and they have a roughly 10.7% of adjusted diluted earnings per share growth, very good from 2015 to 2019 in the double digits. The dividends paid was massive. $25 billion was returned to shareholders in 2015 to 2019. $7 billion in shares were repurchased from 2015 to 2019. This company not only pays out a massive amount of dividends, but they do reinvest back into their business through share repurchases and acquisitions as well. And then from 2019 to 2020, they did do a little bit over a 2% dividend increase, which is keeping up with inflation. So awesome news there. Now, speaking of the dividend, you know that I'm a dividend investor. If you look at the 24 companies that I currently own, every one of them, all 24 of these companies are all dividend paying companies, including Altria. So when we look at this list, we know that I'm a dividend investor. If the company cannot maintain that dividend payment, I'm not interested in it. And when you look at this downturn here, you probably look at this chart and think, oh wow, in 2007, 2008, they cut that dividend massively. Well, that's actually not the truth. I want to go ahead and highlight this little sentence right here that's at the bottom of the chart. It says Kraft Foods spinoff was completed in March 2007, and then the Philip Morris International spinoff was completed in March 2008. So when you factor on the spinoffs, because they did give away part of their company through these different companies with Kraft Foods and Philip Morris, they actually continued dividend raises for the company Altria even throughout the 2008-2009 recession. And even going into the pandemic in 2020, they continued to raise that dividend, and I'm assuming they're going to do so here in 2021. So when you factor this in, if you take away this little downturn here because it was a spinoff, they have raised that dividend consistently. and I mean for a long time. This company's been around since 1902, for over a century now, and they continue to raise that dividend pretty much every single year for almost the last century. Now, if we keep on going further, I want to go ahead and look at their quarterly report, and I want to pull up some information on how they're doing today, and then I'll talk in just a minute how I think they're going to be doing in the future. Now, right now, things have been tough. Some bad things have been happening for Altria, unfortunately. Now, if we look at some of their numbers here, let's look at their balance sheet first, and then we'll look at their income statement. If we look at the balance sheet here, their cash and cash equivalents from December 2019 to September 2020, they have not come out with the December numbers yet for 2020, but they roughly doubled their cash position from 2 billion up to 4 billion. So pretty good news there. Now I know what you might be thinking, they maybe took on a whole bunch of new debt, and that's not the case whatsoever. Because this company actually usually thrives in recessions, and that includes what happened here in 2020. People get stressed out and they turn to nicotine. They get stressed out, they lose their jobs, they can't support their families, and unfortunately, they usually turn towards nicotine and they're trapped in that recurring cycle of smoking cigarettes and other tobacco products as well. But the good news is for Altria, they're the ones that supplies those tobacco products, and me as an investor, I'm able to profit off of that. Now, not only in recessions, this company sells cigarettes and other tobacco products year round, but it doesn't get hit very hard in recessions. And that's why this company did not raise its long-term debt hardly at all in 2020, and that is good news considering that this company has a lot of debt. Now, this company did raise its debt a little bit from 27 billion to 27.7 billion, but considering that the cash position over doubled, roughly $2 billion, that's not really a big issue. Now, one of the main concerns I do have with this company is that they do have a large long-term debt status. Now, I don't like that, but they do have a lot of investable assets and they have massive amounts of cash flows. So, I don't like it, but it's not some massive concern. I don't think it'll catch up with them because a lot of this is financed at very good rates many years out into the future. So that's good news there. Now let's go ahead and scroll down a little bit further and let's go ahead and look at their earnings and let's look at their net revenues. Now their revenues did increase if you look at here for the 3 months ended September 30th, 2019 and 2020. On both metrics they increased revenues. And if you also look at for the 9 months ended September 30th from 2019 to 2020, they also increased revenues on this metric right here. So while this company has struggled with people trying to quit smoking and trying out new alternatives to tobacco products, this company is still finding ways to increase its revenues. And like I said, their profitability, going back to what I was talking about earlier, while this company has struggled to increase revenues over the last decade, it has found ways to increase its cash flows at massive levels. I mean, just think about it. You walk into a 7-Eleven, you walk into an OnQ or whatever gas station you go into, and you can see cigarettes selling for $7, $8 a pack. And it costs Altria it literally costs them pennies to produce it. So when they can produce a pack of cigarettes for pennies and then turn right around and sell it to nicotine addicted consumers for $7 and $8 a pack, it doesn't take a genius to figure out that Altria is having massive amounts of profits from these products. So this is good news for Altria, and when you see that they're increasing revenues, increasing those cash flows, it makes that long-term debt not look quite as bad, even though it might be pretty massive. Now, if we keep on going further here, I know that smoking is dying out. I know that my generation is not really focused on smoking, and this is what's important for this company. If I was just investing for this company for its cigarettes and traditional tobacco products, its legacy business, I would not be a smart investor. Because what's not important to me is what this company did last year or what this company did 10 years ago. What's important for me is what this company's going to do next year, 10 years from now and beyond. And one of the main points of this, if you see their main tabs here, says about Altria, responsibility, investors, people and careers, and most importantly, moving beyond smoking. This company is definitely focused getting past their legacy business, and we'll give you an insight to that real quick right here. Today, over 20 million adult U.S. smokers seek less harmful alternatives to cigarettes. This is a pivotal moment with adult smoker demand for non-combustible alternatives, innovation, and appropriate regulatory framework. We have the opportunity to make more progress on harm reduction in the next 10 years than we have in the past 50. In fact, our future success depends on it. Over the next 10 years, we will invest in our business and our people to transform Altria and our industry. And if we look at some of the bullet points here, to achieve this vision, we will lead the industry in operating responsibly and preventing underage use of adult products, and develop and expand their portfolio of FDA authorized products, maximize profitability, invest in their manufacturing for their employees and their facilities. They're going to siege their leadership in the external environment through communications, engagements, and science based policy and regulatory solutions. They're going to build employee capabilities. They're going to maximize their contribution of Altria's investments to their future long term value. And then, last but not least, I want to talk about this here. Help position Kronos as a leader in a highly responsible, regulated, and legalized U.S. cannabis market. Now, they have two major investments. I should say three major investments I want to talk about. Now, one is done poorly, but they have AB InBev, they have Juul Labs, and they have Kronos. Now, Kronos sells marijuana, and I'm talking about legal marijuana, not the illegal marijuana. They also have a joint venture with Helix as well, but Kronos Group is an opportunity to invest in the marijuana sector as you get more and more invested into these, quote, sin stocks. They also sell other products as well, including Juul. I know that this has been banned in a lot of areas, but their investment in Juul still could be a long-term opportunity as it gets more regulated and they find ways to make products that are more in line with what the government wants to see for underage users. If we keep on going further, they also have their investment in AB InBev. I'm not too bullish on beer and alcoholic beverages, but AB InBev is currently revamping its structure to sell its products more in line with what consumers that are my age demographic, what they want for the future. So AB InBev does distribute a lot of cash flow through the form of dividends to Altria as well because they have a massive stake in them. And as AB InBev revamps their business and continues its massive amount of profitability, they will get massive amounts of cash flow from that as well. But as this company continues to revamp its vision through marijuana and its legacy business like cigarettes, and having other sin stocks as well like Juul and AB InBev through its alcoholic beverages, I think that Altria will continue to get massive amounts of cash flow and will hopefully turn around this business, and that's why I'm investing in it. And right now I don't think I'm going to be making any type of massive changes with Altria, but I think it gives me a lot of opportunity for the future. Because right now if I look at a lot of other companies that I own, let's go ahead and look at some others. I'll give you an example. Let's just say let's go ahead and take a look at McDonald's. McDonald's is a company that I love and I think is going to be very successful over the next 10 years. But when I look at this company, it's giving me a 2% yield. Okay, well, let's look at some other names, for example. Let's look at another one like, let's say, Lockheed Martin. That's a brand new holding of mine. I just added this to my portfolio. It is yielding under 3%. Okay, well, let's keep on going further. And these are considered high yield, by the way. These companies are considered high yield investments. Procter & Gamble, one that I intend to own until the day that I die. It currently yields 2.28%. Not very high at all. But when we look at these companies and considering that they're yielding 2 and 3%, and with an opportunity like Altria, when you can invest in a company and it yields you over 8% in a dividend yield, I think that it is definitely worth mentioning. And while they do have an ugly balance sheet, I think they'll be able to transition its legacy business into more non-combustible tobacco products that are going to be successful over the next 10 years. So while I don't intend to bump it up in my portfolio, I don't intend to take it down either. But I wanted to mention this because I've had a lot of comments with it in the past because, Jordan, it has an 8% yield. I think it's too dangerous. They're going to cut their yield. I don't think that's going to happen whatsoever. So thank you guys so much for watching all the way to the end. I really appreciate it. And like I said, if you want to get signed up with M1 Finance, you can use this link down below in the description. But thank you guys so much for watching, and I'll catch you guys next time.